Canada's economy is in deep trouble, and even economists don't know or understand just how bad it's getting. So we're going to get into that and a lot more today. So first of all, I just want to show you what's going on in this so-called amazing economy. And you look at the power of sale that we've got here. You know, this just shows that it's not just average people that are being hit by this and are losing homes. No, it's millionaire investors with millions of dollars who are also losing their homes. So, you know, it just goes to show the magnitude of what we're seeing happen here within the economy. And it's a trickle-down effect. You see it first start off with the poorest people being affected by the recession, then the middle class, then the richest people, and it's beginning to impact everybody. So as you can see right here, Canada's slumping growth hints at recession starting in second quarter, economists say, and this is obviously because the GDP numbers are fake. Even they point this out in this report that the GDP numbers are completely fake. So Canada's economy expanded by 0.4% in January from the month before, beating analysts' estimate and setting the stage for quarterly annualized growth to hit the Bank of Canada's target of 2%, which won't happen, as we know, with everything else that's going on here. And Oxford Economics really put it great here, as they always do, which is January's strong GDP result was the result of an artificial boost, with companies pushing more exports to the US to beat tariffs, and the GST HST tax break supporting demand, Michael Davenport said at Oxford Economics. So he is totally right about that. The numbers are completely fake in terms of what's happening with GDP, and you only have to look at GDP per capita. I mean, if you go back through history in Canada here, when was the last time that GDP per capita stagnated for as long as it has right here? We're talking we're at 2017, 2018 levels. You go back to 2007, 2008, it didn't even stagnate for that long. You'd have to go back to the 1980s and the late 1980s where, guess what? There was a financial crisis. A lot of people lost their homes, and that was actually one of the worst recessions in Canadian history. And as we know, the yield curve has been inverted to a point that has actually been similar to how much it was inverted during the 1980s, which again shows what's going on. Canadian factory PMI hits 15-month low on expanding trade war. Again, not good. Obviously, the CFIB business barometer is completely down the toilet right now. We know that. It's at all-time low. You've got consumer confidence that is at the lows here if you really take a look at it. If you look at consumer credit, though, it's actually started to backpedal, and it'll be interesting to see if this holds. But it was a substantial drop that we saw in consumer credit that could hint at credit tightening and a credit crunch, which would be a really interesting dynamic. And then you take a look at this, because I saw this post on X, and it does kind of show just how insane things have got over the past 10 years in Canada with immigration versus actually how many jobs are being created, how many new businesses are being created. And as you can see, over the past year, there was actually no net new businesses in Canada. Actually, you were down net 407 businesses at the end of the year. So the amount of businesses that Canada had in 2024 was actually less than it had in 2023. So again, this just shows you blatantly what is going on with the data, and the fact that a lot of the data that we get from the government is highly manipulated or massively distorted, and we can't rely on it. And really, the GDP per capita thing, it screams out what is going on. But if you look at the number of active businesses here, you can clearly see what's going on for 2024. But what's really interesting is you had 725,000 people come in 2024 through foreign immigration, and you had that loss in the new businesses. So obviously that is never a good sign, because it shows how these people are heading straight into a depression and why so many of them can't find a job. As you see all the time, people are either losing a job or they can't find a job. Like, the job market is really bad, and a lot of people are speaking on social media about it. And you've also got mortgage delinquencies that are skyrocketing in the US right now as well. So that is never a good sign, obviously putting an incredible amount of strain on the financial system. And if you look at home sales in Canada over March, they absolutely cratered as well. So again, this is just showing you the strain that is happening right now. And obviously, if people need to sell their home because they lost their job, what is going to happen when they go to put their house on the market and realize there's just no buyers out there and the market's completely frozen? They're going to have to drop the price, but that is if they can actually drop the price, and that is going to be the thing. So obviously a lot of people are going to lose a lot of money in this housing Ponzi as it crumbles. And this is the thing, when you kick the can down the road for so long, you have massive implications of doing that, and eventually you're going to have to pay the price for doing it. And that's exactly what we're starting to see. And it seems like we are getting into that fear cycle, which is one of the last stages, fear and despair in the housing market. And that can last for 3-4 years. So strap in for this one. And then another thing that I want to show you is all this rides on extremely leveraged banks. So if we go to Investing Pro here, you can see that the most leveraged bank in Canada is CIBC here at 480%. You've got TD Bank at 431%. So this is leverage of over 18 times their equity. And what's really interesting as well is if you compare it to overseas banks. So DBS Group in Singapore, for example, has debt to equity ratio of 234%, which is 12 times leverage. And then you've got Wells Fargo that has debt to equity ratio of 188%, which again is 12 times leverage. You see all the American banks and the Singapore bank are at 12 times leverage, whereas Canadian banks are at insane amounts of leverage. So all this does is puts an incredible amount of strain on the financial system, and that could be why you're starting to see consumer credit that is starting to fall. Because at the end of the day, if banks are seeing more defaults, if they're seeing loan loss provisions that they have to keep stuffing money into, they're seeing loan write-offs that are skyrocketing also, what they're going to do is say, let's dial down on lending here, because this environment that we're in, we don't know what's going to happen. And there is a lot of major uncertainty that is going on right now. And there is a lot of recession fear that is out there. And obviously we know that the economy has really been in a terrible state for a long time. It's not just the past 6 months that all of a sudden it's fell apart. The Canadian dollar, the Canadian economy has been going down the drain now since 2022 pretty much. And it really started in 2019 actually, when the economy started going down. The yield curve inverted ahead of the 2020 crisis, and then came massive government distortions, massive stimulus programs that were rolled out that essentially kicked the can down the road all the way to today. But obviously the ramifications of doing that is that the average person has been completely wrecked through inflation, whether they realize it or not. But most people know that. Most people know that their wages just have not gone up and kept pace with their income. And that's the main problem. Eventually, when that happens for a long enough period of time, you see rubber that meets the road. And here you've got, once again, more tariffs as response to tariffs. So this is completely counterproductive. And obviously this impacts the economy very much so as well, because unfortunately it's like during the pandemic, you know, they can't just do nothing. They have to do something to appeal to their voters and supporters. And especially because it's election time right now, although I'm not even sure if Mark Carney can even do anything right now, because obviously the election and everything that's going on. So whether this is actually going to even happen remains to be seen. But just increasing taxes on a consumer that's already completely out of cash, it's just not going to help your economy at all. It's really economic suicide that these politicians are playing. So anyway, if you've enjoyed this video, I'd highly recommend that you check out that video there. And then if you're looking for a VPN and also want to help support the channel, then please go to expressvpn.com/marketmania. I will see you in the next one. Take care, guys.